Thanks for staying with us on the news at 1. More consumers are approaching micro-lenders to secure credit. Banks are not granting them loans due to the strict lending criteria imposed by the National Credit Regulator. That's according to the quarterly Transunion SA Consumer Credit Index, which was released today. It declined to 53.9 from 54.1 in the third quarter.
The index measures consumers' credit health. It shows that financial institutions are continuing to be risk-averse because consumers are highly indebted. Some of these consumers are now approaching micro-lenders to secure credit. They end up paying high interest rates of up to 50%, especially from micro-lenders who do not comply with the National Credit Act regulations.
I think it's becoming harder for them to access credit from traditional lenders, meaning the banking sector. There is a tendency to now move towards microfinanciers and in some cases other mechanisms such as loan sharks. But generally it's become much harder to access credit, which compounds an already tough situation for consumers.
Consumers are still taking up new credit, but the rate of default has decreased slightly. The number of consumers in 3 months arrears with their debt repayments has decreased by 2%. Household cash flow barely improved because of weak income and slow money supply growth conditions in the economy.
But ultimately, amongst a stubborn inflation rate, and even though we have had a decline in the interest rate, we have quite volatile economic circumstances that put our entire household cash flows under pressure.
Consumers' debt to disposable income ratio is at 72.4%, and TransUnion doesn't expect this figure to improve anytime soon because the Reserve Bank interest rate cuts have been slow so far. Naledi Matlapeng, SABC News, Johannesburg.